To global markets, as world stocks headed back towards their lowest levels in almost 2 years today, with sentiment weighed down by unease about rapidly rising interest rates. An escalation in the Ukraine war and China stepping up pandemic measures. There was also a modest respite for Britain's battered bond market after the Bank of England said it would start purchasing inflation-linked debt. European stocks opened broadly lower, while MSCI's index of Asia-Pacific shares outside Japan fell at almost 2% to its lowest since early 2020, with chipmakers and China tech stocks taking a beating from U.S. export curbs aimed at hurting Chinese technology developments. Meanwhile, emerging market stocks hit their lowest level since April 2020 and on track for a near 30% tumble year to date, its worst year since the 2008 global financial crisis. While Britain's unemployment rates fell to its lowest since 1974 at 3.5% in 3 months to August, but the drop was driven by a record jump in the number of people leaving the labour market, adding to the Bank of England's headaches. Now, according to the Office for National Statistics, the number of people classed as inactive, neither in work nor looking for it, rose by 252,000 from the 3 months to May, the biggest such increase since records began in 1971. The Bank of England, which is also trying to stem financial market turmoil triggered by new Prime Minister Liz Truss's unfunded tax cuts and her pledge to end the economic prevailing attitude, is worried that the shrinking labour market will fuel inflation pressures, which maintain intense pressure on the Bank of England to raise rates aggressively over the coming months. However, investors are betting heavily on a full percentage point increase in the next policy announcement on November 3, as it moves to offset the inflationary implications of the tax cut announced by Finance Minister Mr. Kwasi Kwarteng last month. Away from the UK, the Hungarian government says it is building pipelines to supply Serbia with Russia's crude oil since the European Union sanctions limit supplies via Croatia. However, the EU has placed an oil price cap for Russian seaborne crude deliveries to third countries as part of sanctions imposed due to Moscow's war against Ukraine last week. The new oil pipeline will enable Serbia to be supplied with cheaper Urals crude oil, connecting the Friendship oil pipeline. According to Hungarian government spokesman Mr. Zoltán Kovács, the country relies heavily on Russian oil and gas, adding that the measures drove up energy prices and caused a European energy crisis. But Budapest backed last week's sanctions package by the EU. Let's start things off now with oil prices, as it slid more than 1% today, extending losses of nearly 2% in the previous sessions as recession fears and a flare-up in COVID-19 cases in China raised concerns over global demand. U.S. West Texas Intermediate crude maintains the red zone for the second day, selling for $88.94 per barrel with a price decline of 2.40%. And Brent crude futures recorded a downward price margin of 2.13% to sell at $94.14 per barrel. And Body Light is selling for $98.36 per barrel with a price decline of 0.67%, while the OPEC basket crude oil dealers are offering $97.43 per barrel with an uptick of 0.00%.